All right. Back to work. Hope you guys made some money today. Fantastic day today. We got that range reversal we talked about in last night's video. And man, oh man, that big move higher today into another sideways trading range. Now, wait a second. Those three clues, range reversal, big move higher, and a new trading range, that tells you right there. That tells you exactly how to make money tomorrow. We get some really easy trades we're tracking for tomorrow. And by the time we're done this video tonight, you'll have an easy roadmap to make some money as well on Thursday. Before we jump in and talk my favorite trades for Thursday, make sure you subscribe. I don't want you to miss tomorrow night's video, so hit that subscribe button for me. And if you enjoy these lessons, if you like these videos, if you're learning more and earning more because of them, hit that like button for me. Give me a shout out down in the comment section. Thank you so much for stopping by the channel, tuning in. Let's go find some more good trades tomorrow. Charts are all ready, you can see here in front of us. Nasdaq triple Qs are all ready. Oh, the SPY and the E-minis ready. I'm glad to see you are ready right along with us. What are the 60-minute time frames telling us right now? We're bullish overall, there's no doubt about that. But the most important clues right now, we have a trading range on both of these and a big, strong breakout into overhead resistance. This is a really important chart. We know we're bullish. We know we're breaking out. But, we don't trade off a 60-minute time frame in our trade room. We trade off tick charts in our trade room. There's no major news for tomorrow, so let's get right into it here tonight. Let's drill right on down into our tick charts, because tick charts, I think, are going to make everything a lot easier as far as entry timing. We know we're bullish. We know we get a range breakout. We know we got big all-time highs overhead. Let's take a look at the tick charts, because this is really where the entry tactics come in, right on the tick chart. This, of course, is a 7,000 tick chart. You can see linked up in the upper left-hand corner. And if you're watching for the first time today, welcome. This is the 21 EMA, that yellow line you see on the chart here. There are three big clues. I mentioned them earlier. That range breakout, that big move higher, that bull range. Let's put this together and help you guys make some money on Thursday. Now, first of all, anytime we see a big move higher, what does that tell us? We don't want to buy high. We're bullish overall, but we don't want to buy high. We make our money by buying low, right? Buying low. Anytime we see a big move higher, I'm looking for a two-legged pullback and a retest of the high. Write that down. Anytime you see a big move higher, we don't want to buy high. We want to buy low. I want to find levels of support underneath me, but I want to find that two-legged pullback, buy that dip, and the target is to go back up to retest the high. That's the first clue, and it's one of the most important clues. The second clue is this bullish trading range. Bull market up into a sideways trading range. Now, ranges, you know me, I love ranges. They give us two ways to make money. One is bear traps underneath the low of that range, which I love the idea for tomorrow. And the second way to make money with these is to trade a breakout pullback. That's a very attractive trade for tomorrow as well. But the third clue might be the most important clue on the chart, and it's that range breakout we saw on the 60-minute. Now, if you zoom all the way out, right, here's that big range down here. It's easy to see, of course, on the 60-minute. But what do we talk about the ranges? Anytime we have a range and we break out, what do we expect? A breakout pullback. And I got a couple breakout pullback zones I'm watching as we go. So put all this together. There's a pretty easy way to make money tomorrow. I love the idea of getting those two-legged pullbacks. I love the idea of a breakout pullback, a bear trap below that trading range. It's a bit difficult to time the perfect entry on this. We'll talk about how to time the perfect pullback entry. We'll go into that here in a moment. There are three different entry patterns we'll talk tonight, because I don't know what we're going to get tomorrow, but I'm going to make sure that you know how to trade it no matter what variation we get. And of course, the second one is if we go higher, right? That range breakout pullback. Now, breakout pullbacks, lots of ways we can structure this. So we'll talk about that as we go deeper into the video. My favorite trade for tomorrow is to get that two-legged pullback. Now, in my free trading classes, we talk about measured moves, right? Measured moves are 100% extensions, right? They're basically symmetrical pullbacks. When I say two-legged pullback, you want to go a little bit more than a measured move, all right? So finding that perfect pullback right now, think about that two-legged pullback a little bit more than a measured move. We talk a lot about these in our free trading classes. So once we get that two-legged pullback, pull back down, again, I'm looking for support, right? Support, all of these support levels. The problem is, I don't know. I don't have a crystal ball. I can't predict how far that move will go. For all I know, it'll go here back up, but it might go right all the way back here and go back. I don't know, right? So rather than trying to pick the bottom on this, what I'll do is, as we get that deep pullback to allow buyers to buy low, I'm going to wait for the pullback now to the 21 moving average. And once we begin to come back into that 21, again, I don't know how far this thing will keep going, but if I see those bears come in and try to keep it going once, then go higher, and they try again. Now what I'll do is I'm going to use their stop losses. I'm going to use their pain, right, to fuel that move back up to retest the high. Remember, it's a big move higher. We're looking for a two-legged pullback and a retest of that high. Always. It's never different, especially when the overall market is bullish like it is right now. The only thing we don't know is we don't know how far that pullback will go. So once we pull back into our zones, we then look for those bears once, bears twice, and we trap in those traders and squeeze their stops for a run back up to retest the high. Now, pay attention right now, because this is very, very important, very common we see in our trade room. Let's say we get that two-legged pullback. Let's say now we get that beautiful, what we call a two-try failure. If you're taking my free video classes right now, this would be a two-try failure pattern. A lot of examples of these in the free video course. Let's say we get that deep pullback. We get that beautiful stop run. It squeezes higher. Great. We take our 1-to-1 first target. Stop moves up to point of entry. We talk about this course. A lot of examples of this in our free video series. Now, here's what happens a lot. A lot of times, we'll take some profit off at the underbelly of that move. And for whatever reason, the bears will come in and they'll whack it right back down again. And it'll go back and retest that low. If that happens, this is not a reversal. All right, it's not a reversal. It has to continue quite a bit to be a reversal. We're an overall bull market, so do it again. Okay, do it again. These, again, remember, I don't know how far it will keep going. What I do know though is once they retest that low and we start seeing bears come in, these are rookie bears, right? These are not professional sellers, right? These are rookie traders who are chasing after that. The pros are shorting right here. The pros are taking their profit back at that low. The professional sellers are buyers at that low. That's how you know these are rookies, right? Now, once those rookie bears come in and they commit, they put their money in the market, now I know where their pain is, right? See this? We don't pick the bottoms here. We know where we want to look for it. We let the buyers come in, let them get stopped out. Watch very, very closely. This is very, very important. As this thing starts to squeeze going higher, where does the market want to go? It wants to go back up and take out that high, right? It's a two-legged pullback. It wants to retest the high. What we almost always get after a double bottom retest like that, it'll run up and you'll get a beautiful little bear trap right below this low. Now, this is a technical term. It's called a bear trap. Bear traps are very, very simple, but you got to learn them, right? It's a higher high in price and a move right below that low. All right? So again, think about this, right? We get that two-legged pullback. Again, we're going to go back to retest the high. We trap the bears in. And hopefully that trade will go right back up and we all get big paychecks, right? Hopefully it's nice and easy like that. But in the event where they hold that underbelly, it's quite common. It happens a lot. We hold the underbelly. We run back to retest the low. Do it again. Do it again. That's that double bottom retest. I'll tell you right now, these can oftentimes be the biggest winners of the day, because now all the bears who sold short right here, they're getting out. We're trapping in those rookies and we squeeze it. Two-try failure pattern into a bear trap pattern, just like we talk about in the free trading class. And also keep in mind too, right? If we run lower, trap those bears in, right? And then squeeze higher. Same thing. Squeezes up. Look for that bear trap again. Okay, so you can always use those bear traps. It doesn't need to be after a double bottom. Remember though, trap those bears in below 21 EMA, get that higher high in price, and buy as low as you can with my target. Target's back up to retest the high. Now, let's talk about one more variation of this, because I love to trap those bears in below that 21 moving average. Very easy way to make consistent money. But sometimes we don't get it. Sometimes the market drops like this And there's so many buyers down here, we don't get the chance to trap in the bears, and the market simply rips and runs right back higher. Okay, these V bottoms can be very difficult on our psychology. Because what happens is once it V bottoms, at least if you're like me, I start thinking, oh shoot, I missed it. I get that FOMO, that little feeling in your stomach where I missed it. I better get in. Do not chase these. Okay, what do you want? You want that bear trap. Okay, it will always be this bear trap every time, right? There's very little examples where you wouldn't look for that bear trap. Again, we're overall bullish on the 60-minute, all right? So again, we may run down, breakout pullback zone. Again, I don't have a crystal ball. I don't know how far that pullback will go. But I do know, though, if this thing bounces hard off of that low, I'm not going to chase it going higher. Remember, a lot of times they'll come back, they'll hold the underbelly here, and they'll run it back down and retest that low. I don't want to buy into that bull trap. I want to do the trapping. I'm the one do the trapping. You're the one that's doing the trapping, right? Get that higher high in price and buy back up again. All right, guys? Now, let's slow this down for a second because I know most of you guys know these patterns. I know you guys know traps and failures, but if you're watching for the first time right now, this might be a brand new language for you. This might be way over your head. I know I do things a bit differently here on this YouTube channel, but don't you worry. I teach all these patterns. I have hundreds of examples of traps and double bottoms and failure patterns, all taught, all included in our free video classes. What I'll do is I'll put a link up here for you in the upper right hand corner. If you like making money, if you're tired of losing money, hit that link up top there. I have taught thousands of people in my career how to use this stuff. Hit that link that popped up there. Take that free trading class because the strategy you're going to learn in that short video series will teach you a simple trick we use in our members trade room to know exactly where the best winning entries are going to be. Once you know where to look for them, then I'll teach you 4 of my favorite entry patterns, help you time better entries and start making money on your own. The markets are way too good right now. This is about as easy as trading gets right now with these big trends. If you're not making consistent money right now, if you're tired of missing the best trades, hit that link up top there. Take that free trading course. It is perfect for someone trying to make the jump into full-time trading. And as always, don't forget, if you can't grab that link, I'll put all the important links we talk about tonight in the description. I'll put the free class links down there. We trade together every morning in our members trade room. I'll put our trade room membership information down there. And of course, I'm on Twitter during the day. If you're on Twitter or X, I'll put my handle down there as well. All the details will be there down in the description. All right, guys, let's talk about one more variation. And then I want to talk about the go higher. All right, because we may go higher. And if we go higher, we want to make sure we have a game plan for that too, right? Nobody knows what's going to happen tomorrow. The key is we rehearse this stuff beforehand. That way we have a game plan no matter what the market. What if we get a shallow pullback? All right. We talked earlier about this. I'd like to get that 2-legged pullback. That's kind of the goal. But what if we don't? The markets are pretty bullish. You got that all-time high overhead. Sometimes once people see those all-time highs, the market gets a little bit anchored, going higher. And so we may not get that deep pullback. If all we get is a shallow pullback, what is my problem? What is my problem? Remember, there's always a problem, all right? Here's the secret, okay? There's always a problem. The problem is either location or momentum. You always want to ask yourself, what's my problem? There's always a problem, all right? There's no free lunch in trading. If it looks perfect, you're missing something. There's always a problem. If I want to buy a shallow pullback, which one of these is my problem? It's not momentum. Right? I'm going with momentum. I'm going with momentum. That's fine. Location's my problem. Why? Because I'm buying high. Why am I buying? Because it's a huge move going higher. Right? We have to think that in most cases, not every case, but in most cases, after a big move higher, buyers are not going to want to buy really shallow pullbacks. They're not going to want to buy high. They're going to want to buy low. The same reason why everybody else wants to buy low, right? Okay, so if we get a shallow pullback, my problem is not momentum. I got plenty of momentum. My problem is location. So I'm concerned. If I see a shallow pullback, I'm probably not going to get a lot of the big money buyers there, right? I would imagine the big money buyers are waiting down here. They're waiting to buy the dip. They want to get a small risk, big reward trade, right? That's where the big money is made. So if I'm going to buy a shallow pullback, and I don't have the big money players on my side, I need something else to offset that bad location. And to do that, just guess. it's a bear trap. It will always be a bear trap because bear traps do two things. They trap in the sellers to allow us to use their stops, right? Their stops are right here. If the bears come in and they try once and they try twice, their stops are right there. And the reason why that's important is because when you get stopped out of a short trade, okay, when you're selling short, if you get stopped out or forced out of that trade, you have to buy your way out. So when stops get hit, it oftentimes gives you that fuel you need to make some money. Now, the most important thing with this, though, is it's a bear trap. It's not a two-try failure like here. Down here, it's a 1, 2, it's a failure pattern, right? It's a failure pattern. Okay, we'll use stops to squeeze those bears. A shallow pullback, though, I need to buy as low as I can, and that's why we have bear traps for it. Again, it's a higher high in price, and it moved right below that low. Now think about that pattern, what that pattern actually does. Right? What it does is it not only runs the stops to give you that juice going higher, but it gets you in really, really low. And why is it important? Because in this scenario, in this example, it's a shallow pullback. We're not going to have the benefit of that deep pullback we know all the smart money is waiting for. So whenever I have a shallow pullback like this, I'm gonna run the stops, but more importantly though, I want to buy as low as I can because buyers want to buy low. All right, so watch out for that shallow pullback trap. All right, I think we've covered a lot of the scenario now to help us kind of time that perfect pullback down here, no matter what variation of that we get. The next stop is, though, let's now talk about if we go higher, right? If we go higher, because we get a lot of resistance up overhead. And I think there could be some pretty easy money for us to make tomorrow if we go higher. Let's grab the Nasdaq. Nasdaq's feeling lonely over here. The Nasdaq is very similar to the S&P here on the 60-minute chart to begin with. We're bullish into a trading range. Nice big breakout. And you'll notice, right, we're running into overhead resistance. If you've been following this channel for a while, we, of course, had that range back there end of the month of January. The amount below the range, project above the range. We're running into quite a bit of overhead resistance. Let's now drill down to our tick chart because, as always, the 60-minute time frame is great to see the bigger picture. It tells us what direction to be focusing in. It tells us where we have some major levels to worry about, but the tick charts are usually where, at least in my opinion, they're so much easier to make money with. These, by the way, are Ninja Trader tick charts. If you want to take your trading to the next level, I would definitely get a free account with Ninja Trader. I have no affiliation with them. I just want you to the best tools so you can come out and join us in the trade room, make a lot of money with us in our trade room. There are, for the most part here, the same basic clues here on the Nasdaq. We have a big move up today. Nobody wants to buy high. We go right into a trading range. Ranges act like magnets. And again, we've got that range back here, right? This is that breakout pullback area from that trading range. Virtually the exact same stuff we just talked about on the S&P. So knowing that, right? Knowing that if we do go lower, right? This again is it's the same game plan, right? So I'm not going to go back and repeat the whole thing, right? But watch for that two-legged pullback, watch for that double bottom reversal, watch for that shallow pullback trap, right? Buy as low as you can. There's a beautiful one right there, right? Run lower, bears once, go up, bears twice, little bear trap right there this afternoon on the Nasdaq. I have a ton of examples of these inside the free trading course. Now, let's talk about this range and the breakout going higher. All right. There are really two types of scenarios that you have to be ready for whenever you get a range breakout. All right. One of them is a breakout pullback. Okay, these are easy. We'll talk about that in a moment here. Okay. The second one is the one that's a little more difficult, and that is the fake out breakout. All right. Remember, ranges are magnets, and we're right into overhead resistance. It should not surprise anybody if we made a run higher and then fake out, right? Head fake off the high, bull trap off that high, and crush right back down again. We got CPI next Tuesday, right? Do you think the marks might be setting up for maybe a little rug pull? Had that CPI report? Possibly, right? Possibly. So we'll talk about that fake out breakout because in all reality, that's probably the easiest way to make money for tomorrow. First things first, though, let's talk about breakout pullbacks. You guys know this by now if you watch these videos. Ranges act like magnets. In a bull range like this, when I get a breakout like that, I'm going to go back and look left and use what was resistance as a key area of support and buy that breakout pullback. Now, this is a very simple idea, right? But in practice, in execution of this is kind of how I trade it in our trade room. The most important thing is once we get that breakout, going higher, I look left over here and I find those areas. Now, think about that 21 EMA. Think about that two-legged pullback I talked about earlier, right? What was it again? It was a two-legged pullback. And how does it work again? It's usually a little bit more than a measured move, right? Remember that 100% extension we talked about? Again, we teach this stuff in the free trading classes. All right, so we're looking for that two-legged pullback. And then what do? Do I just buy that? No, we don't blindly buy that, because for all I know, the minute I blindly buy this is the minute this thing tanks, right? You know how that goes, right? The markets have a sick sense of humor like that. They torment us. We can't simply blindly buy that. We do is we wait to get in the zone to be a buyer. We then wait for the bears to come in and show their cards, right? Once the bears come in and commit some capital, now I got you, right? Now you're trapped. If we run lower, good for you, right? But the odds aren't very good for that. We're an overall bull market. The odds are against the bears right there, and I would rather be on the side of the odds on that. Run that stop, right? And then break out from there. Now, very important. Right? Pay attention right now. Very important. One of the most consistent things about range breakouts is once you get that breakout pullback is a measured move. Right? Believe it or not, that took me like 10 years to learn that. I just taught that to you in a couple seconds. All right? You are welcome. You're welcome. I'm kidding with you. But this is one of the most consistent parts of range breakouts. The breakout leg is the measuring leg. Okay? We know how big that one is. We now look left. Well, once we know how deep the pullback is, then we know how big that final target is. Okay, what I do is I'll take some off at that high and leave the runner up to that measured move. All right, guys, this is the recipe for a breakout pullback. Again, we don't pick, we don't buy the breakout, right? Because we're into resistance. We wait for the breakout to happen. We get that two-legged pullback. We trap those bears in. We run those stops. And by the way, this could easily be a failure into that bear trap, right? We talked about earlier, a little higher high in price, a little trap area, or a little swing below that low. That is the entry you look for as we go, right? Again, two-try failure pattern, bear trap pattern. All right, we teach these, of course, in the free video classes. Most important thing is breakout leg, pin to that low, target, right? Target. Again, one of the most consistent ways to use measured moves is after a range breakout, okay? Very easy way, very consistent way to make money. Now let's kick it up a couple notches, all right? Now let's talk about the fun stuff. Let's see what happens if we get a range reversal, right? A fake out breakout. There's your trading range. Now we go up, right? But instead of keep going and pulling back now, it goes up and gets whacked, right? It's whacked right back down again. Okay, now first things first, the amount that we go above the range is almost always the amount we go below the range. Okay, so once we know how big that kind of fake out breaking off the high is, once we know that, then we know how big of a pullback we expect on the opposite side. Now remember, we don't simply pick that bottom. We don't buy that bottom because for all I know, it'll keep on going. And the one time I do pick that bottom is guaranteed to keep going, right? It's the way the markets work. What we'll do though is once that 21 moving average comes in, and stop me if you've heard this already. This should sound pretty familiar, right? We don't pick that bottom. We trap those bears in, right? Let them try a couple times. We get that failure into that, you guessed it, that bear trap combination. Right, I call these in the trade room. I call these failure into pullback combinations. Right, it's a failure pattern below the low and a pullback. Again, I'll keep it broad right now. A pullback, but really what it is it's that higher high in price and that trap below that low. All right, does that make sense? Okay, so again, if it rips higher overhead, but then instantly gets crushed right back down again, measure the amount above, pin it down below, don't pick that bottom, but trap those bears in and squeeze them right back up again, right? Targets are where? Other side of the trading range, and you know where the market wants to go. Anytime we see a big move higher, what does it want to do? It wants to pull back and what? And retest that high, right? Leave that profit target up that high and get paid, right? Okay, now I'm sure everyone's thinking, well, wait a second. Okay, that seems pretty easy, but could I short off the top off there? How would I short off that top? Well, let's talk about this. If I want to sell above the high of a range, what's my problem? What's my problem? There's always a problem. There's always a problem. Is it location or momentum? You tell me, right? You tell me. I want to sell, right, back down to that trading range. What's the problem? It's not location. Location's great. That's a great place to sell. You're selling high, right? It's a great place to sell. Up around overhead resistance, it's a great place to sell. What's the problem though? The problem is, it's momentum. Why? Because we're so bullish overall, I'm going against momentum. See, there's always a problem. There's always a problem. If you don't see the problem, you're just not looking at the right stuff yet. Okay, so how do we solve that problem? I don't expect there to be a lot of bears up there. All right, not professional bears. They're smart. They're buying dips right now. So if I can't rely on the big money bears, I have to trap in the rookie buyers. How do you do that? With a bull trap. You're exactly right. A bull trap. Buyers once, buyers twice. Lower low in price, right? Lower low in price. And what is it? A move right above that high, right? I also call these crown reversals. In our trade room, kind of a nickname we have for bull traps off the high. It's buyers trying once, it's buyers trying twice, and that bull trap off the high. Now, sometimes what happens is it'll go like this. It'll pop up and slam back down and grind and grind and grind. These are called pop and grinds, right? They pop down and they grind. Draw a trend line off that low. Watch closely. Pin up around that high. And then what do we always say? Look left. Find some prior swings, and you want that, again, that bull trap off that high. Now, this really could be, it could be a bull trap right here. This could be a buyer failure pattern. It could be a pullback combination. I wouldn't chase it going lower, right? You want to short top that channel. And then again, where's my target? Where's my target? The amount we go above, the amount we go below, we know where to take profit. Remember, if you want to make more money, guys, don't trade more often. Get better at holding on to your trades longer by knowing how markets work. That comes with experience, and you'll learn a lot more about the stuff, of course, on these videos, and we'll go into a lot more detail in our free video classes. All right, guys? So that is another variation, right, of that sell bull traps on the pullback. All right? That wasn't too bad, was it? All right, so now you know the game plan for tomorrow. Now you know how to buy that perfect pullback. You know how to trade a breakout pullback, which again is pretty simple stuff, right? You also know the more advanced tactics, that fake out breakout. And I should also mention too, if you're trying to short that top, all right, if you're not making consistent money going with the trend right now, I would rather have you skip that short, right? Let's get you making money going with the trend first. And you know, for what I always tell my students is, this is a half size position, right? It's a quarter size position, right? We're not risking a full size position, right? If you trade 2 contracts, trade 1 contract. You trade 10 contracts, trade 3 or 4, right? When you're going against a trend like that, it's always inherently going to be less reliable, all right? So again, if you're not making money going with the trend, this might be a 0 position, right, for you, right? It might be a simulated trade or a demo trade position until you kind of get the rhythm of this stuff and start making money. All right, guys? Now, speaking of making money, tomorrow morning, we're going to get back together again, 8 o'clock Eastern time. I can't think of any better way to learn this stuff than to come out and trade it with me every morning. I have hundreds of people right now trading with us every morning in the trade room. You will love it too. I'll put all the information we need in the description. I'll put our free class links down there, my trade room membership links, my Twitter stuff down there, all the stuff you need in the description of the YouTube video. Questions, any trouble getting access to our video classes, don't be a stranger. You know, Megan and I are always here answering calls, answering questions. Call the office, send an email, jump on live chat. If you need help, I'll be here to help out every step of the process. Right, guys? The game plan's ready. Hope you learned something tonight. Hope you use this knowledge to make a killing tomorrow. As always, thanks so much for tuning in tonight, sticking around all the way to the end. In the meantime, be well, be nice to each other out there, and be here next time. Adios, amigos. Bye-bye for now.